Hello students, hope you are doing well. So in this video, we are going to continue our journey of national income aggregates. But in the previous video, we have studied that how the connectors like depreciation, net indirect taxes and NFIA, they are used to get from one aggregate to other. In this video, we are going to discuss the details of each connector. So are you ready? Okay, so national income aggregates, that is the details of connectors. So first is depreciation. Now we know that on using the fixed assets, or you may say capital goods, these gets depreciated over the period of time, which means wear and tear. जैसे हम इसे यूज करते हैं, इन गुड्स को यूज करते हैं, टाइम के साथ ये डेप्रिशिएट होते चले जाते हैं, इनका जो रीसेल वैल्यू है मार्केट में वो कम होती चली जाएगी. दैट इज द मार्केट वैल्यू कीप्स ऑन decreasing, the resale value in fact. So it is a wear and tear of fixed assets over a period of time. Now very interestingly, in numericals, whenever it is asked in question paper or exams, whatever, it has got alternative names. Okay, it is known by replacement cost, consumption of fixed capital consumption allowances. So you have to keep in mind that these are the different names of depreciation. Now how we use depreciation? That is simple application. If we have to find net, given is gross and we have to find net, right? Then what we are going to do, we are going to subtract depreciation. You remember, subtract depreciation from gross to get net. And if we have to get gross, we have to add depreciation to net value. So in this sense, we can use depreciation to get net to gross or gross to net, right? So this is the application of depreciation. Next, we have net indirect taxes, NIT. So first you have to keep in mind, NIT is composed of the difference between indirect taxes and subsidies. Now we all know that indirect tax is the tax which is imposed by the government mainly on the expenditures made by the consumer, or you can say on the sale of goods and services, right? So the most common example is GST, or other examples are like custom tax, excise duty and all. And subsidies are those financial assistances which are provided by government. So जब भी हमें net indirect tax find करना है तो हम क्या करेंगे? We should have the value of indirect taxes and subsidies. So we are going to subtract. So simply, as I mentioned, GST, excise tax, custom tax, all are the common examples of indirect taxes, and subsidies are the financial assistance. So what is the relationship? So whenever we have to find market price, remember we have to add indirect taxes and subtract subsidies. Now what is the meaning of this? Like factor cost is that cost at which the good is produced. It includes land, labor, capital and entrepreneur, their remuneration. So I should say factor cost is the cost of production in simple language, where factors are paid, their remunerations are paid. But when we are going to find the market price, that is the price at which the good is actually sold in the market, or the price at which consumer purchases from the market, so we see that government imposes tax, that is indirect tax is added to this. But because government also provides subsidies, so this subsidy value gets subtracted. So overall, MP is equals to factor cost plus IT minus subsidies. And we have just discussed a while ago that IT minus subsidies is net indirect tax. So we can say MP is equals to factor cost plus NIT, or in different way, we can say if we have to find factor cost, FC is equals to MP minus NIT. That means whenever you have to find market price value from factor cost, you have to simply add NIT, and if you have to arrive to factor cost, you have to subtract NIT from MP. I hope it's clear. You need to practice few numericals, simple numericals based on this. The concept is very simple. The next and very interesting connector is NFIA. Now, net factor income from abroad, that is NFIA. Some authors use this, instead of this I, they use NFYA. Okay, instead of I, they use letter Y. So don't get confused. Y symbolizes income in economics. So sometimes it is used. So it's NFIA or NFYA. It's the same thing. Now, NFIA, that is net factor income from abroad, is factor income from abroad minus factor income to abroad. Very importantly, it is from minus to. Now, you have to keep in mind whether the value of factor income from abroad is equals to, greater than, or less than factor income to abroad. It doesn't matter. It has to be first factor income from abroad, then we subtract factor income to abroad from this from value. Remember, so it has to be the main value subtracting, that is factor income to abroad. Now, ultimately, what you have to keep in mind that the result is maybe positive, negative, or zero, but what these factor income refers to means what are the components of factor income, whether it's a from or to. So it includes, rent, interest, wages, and retained earnings. Simply, when we say profits of the entrepreneur out here, companies, they're operating in different countries. So whatever profit that we generally talk about, it's a retained earnings from or to abroad. So what I mean to say, it's a rent, interest, wages, or retained earning. It can be from or to abroad. Remember, these are the components of factor income. Now, very simple flow chart or diagram can be used to explain this concept. Like, for example, we have this rest of the world. ROW stands for rest of the world. That is the economies with which the domestic country or domestic economy has trade relationships, right? Now, out here, we have said this is a domestic country. Like, suppose this, let's take this as India. Now, when factors are provided to rest of the world, just I'm taking one example. Suppose labors are provided, labor services, right? Labor services. Now, this is one example that factor services are provided. Now, as a remuneration, factor income flows from rest of the world to India. This is an example of factor income, okay, from abroad. This is factor income from abroad. So you have to note this from. Now, similarly, suppose there is a service, okay, maybe capital. So let's take an example that capital is provided by rest of the world to India. Now, the remuneration for capital is payment of interest, right? It can be in the form of borrowings by India from rest of the world. So interest is paid. Interest paid. So when interest is paid, okay. So this is again the example, that is factor income to abroad, right? So we are talking about two. So you need to, and in case of labor, as I mentioned, I did not use that word, but understood that it is wages, right? So for labor services, we are getting wages, which is factor income from abroad. For capital, okay, we are paying the remuneration, that is interest payment, and that is factor income to abroad. So similarly, like there are other factors. It can be retained earnings, it can be rent, and other basically these factors. So when we have this inflow and outflow of the factor services, the payments are made. It is always factor income from abroad to factor income to abroad. Okay, factor income from abroad minus factor income to abroad. So this is NFIA. Now, the role of NFI is very important. When we have any value which is in, we have to find in national. So national value from domestic, we can get domestic value plus NFIA. So you have to remember this. National value is equals to domestic value plus NFIA. A very simple example. If you have to find NNP at FC, that is net national product at factor cost, right? Net national product at factor cost is equals to, you can say, NDP at factor cost plus NFIA. So remember that from this domestic to national, what we have to do? We have to add NFIA. I hope it is clear. This is national income. This is domestic income. So when we add NFIA to domestic income, we get national income. One more important thing, that can national income be less than domestic income? Can the value of national income be less than value of domestic income? Answer is yes, when NFIA is negative. So NFIA negative when added to NDP at factor cost, NNP at FC is lesser than NDP at factor cost. Just one simple task that you should be doing. Suppose NFIA is negative 10, NDP at factor cost is say 1020. All these values are say in rupees, crores or million US dollars, whatever you can take. Now what is NNP at factor cost? Just you see how you get national income lesser than domestic income. Okay, stay tuned for the next video. Till then, take care.